What's going on, guys? Welcome back to Let It Grow Investing. Thank you very much for being here. I'm Jeff, and we're going to try to get caught up on everything in the market today. A lot of different things going on out there. A lot of different things going on over here. Trying to get ready for snow season, getting trucks together, getting salt, orders in, getting material out to other subs, just doing this, that, the other. I was actually at an equipment auction earlier, and it's actually Friday, which is very rare for me to find time on a Friday to get my recording done. But somehow we managed it today. So, I don't know if you guys if you're on the group, you saw that the Spotify end of year, their Wrapped came up, and it kind of gave me a moment to reflect on just what this year has done. Progress of the show, which I kind of still feel, a little bit standstill. We've, added a couple listeners here or there. It says, we're listened to in 23 different countries this year. It's really cool. It really is. But I mean, as far as the actual numbers without like the percentages and the spin, it still feels very similar to what it was the past couple of years. And that's okay. I'm still here. I'm still happy doing the show. I enjoy it. I feel like I've learned a lot. That being said, I'm sure a lot of people are here saying, hey, are you a financial professional? Why should I even listen to this landscaper talk about money, right? Why? So that is definitely something that I wanted to get caught up on today. This is definitely a case where I've been doing this for 9 years. I've probably had more, experience into it and a little bit more knowledge about it before that, but I didn't really have the funds, or I was a little bit too nervous to put the money into it. After buying a house and trying to, add more equipment that I needed for my business, the money was kind of wrapped up in that. And then right before, we had our oldest son, I thought, you know what, I really need to set this money aside and have it grow and work as hard as I do to make the money, right? So that's kind of where this came from. And a lot of it was really, seeing a lot of other people just poorly manage their money, just really not know where to turn. And I really wanted to change that. So, if you're new to the market, great. I'll try to help get you caught up. This is exactly the reason that I started this podcast. It is kind of over time become, hey, what stocks are we looking at? But it kind of got away from the reason that I was originally here, which was trying to explain different terms, trying to, really demystify what's going on out there, making sense of it as to why you should get invested, why you should stay invested. And man, that's a really complex question to answer. And a lot of people have a lot of bad taste in their mouth of, hey, I bought it and it goes down, right? So I think I try to answer that every week as to what stocks I'm looking at and then why we would be looking at those at that given point in time. That's a long history of what we've been doing here now is what stocks to buy and when, not just simply what stocks, but the timing and the entry point. There's always something that is on sale, right? There's always things that are, rolling up in value. I don't look to buy those. Palantir right now, crazy awesome returns. Would I still nibble here and there if you want to average in over the course of the next year? Sure. Yeah, you can buy a couple shares every week. But that is not normally what I am looking to do. I'm looking to buy those deep value stocks that get us bigger returns at a quicker clip. And, we can outpace the market that way. So that is definitely a case of what I'm looking at today. A little bit of how I've been doing and really why we should even be listening to me, right? So I think I've decided that we're going to share a little bit more of what I do in my own personal account, and I know I'm going to share this screen here. So this is actually my account. I mean, you guys can see it. There's nothing I'm hiding. This is just my one brokerage account. So I mean, yeah, it's creeping up to 7 figures. I'm very happy with that. We've got $257,000 worth of gains in this account. And that's not accounting for the stocks that I've already sold. I've already taken a profit on and reinvested elsewhere. None of the money I've ever put into this account has ever come out. So I have just reinvested it into other positions. And I'm looking to build up dividend income. I've talked to you guys about that before. There's, $11,700 of dividend income in this account. And, that probably to a lot of people sounds like that's nothing. Why am I even worried about 11 grand a year? I can do this or that and make that in a year, right? But a lot of the stocks that I have here are not dividend paying stocks. So that is certainly a case. Well, now I guess a couple more are. I could probably adjust this to show what the percentage is on dividends. But yeah, I mean, you look at Nvidia, you look at, now Meta does pay a dividend, but Alphabet, DraftKings, all these stocks that don't pay a dividend, they're still in here, and they're here for growth. There's certainly things that have lost me a lot of money. This covered call on Palantir to sell at 40 in 2 weeks. That's going to be a loser for sure. I'm going to sell 100 shares at 40, and they're currently trading at 76. But we've got 515 shares. So even after that, I'll still have $32,000 of Palantir stock, and I'll have $4,000 worth of cash in order to deploy elsewhere. Tesla, not a dividend payer. I sold out. This past week was $30,000 worth of Tesla that got sold. I've since bought back in, and I have 3 more purchase orders ready to go, levered down from here. So 339, 325, and 305, I believe, are my purchase prices. And those are 8-share increments. So again, there's definitely been mistakes that I've made. There's definitely been things that if I, could go back, I would change. But there's also been things that I've learned. Neo. I thought this thing was going to go to $100 when it was at 40, and it went the other way. And I didn't have anything stopping it from dropping $14,000. So that's painful, right? That is certainly painful. So learn from some of these mistakes, set your stop losses. Don't buy so much into speculative names based on other people's recommendations, me included. Don't do it. It's very easy to get lost into what's going on here. But at the end of the day, for this year, how are we actually doing? Well, my performance for the year, I'm outpacing you can see here the NASDAQ is blue, or light blue. The Dow is, I'm guessing that's like a purple. S&P is like orange. Oh no, I guess mine's purple. That's dark blue. We'll call the Dow dark blue. So I'm outpacing even the NASDAQ. The NASDAQ's at a 27.8% return, and I'm at 36% for the year. Is every year going to look like that? I don't know. Over the past 3, I've outperformed, but I mean, there was definitely dips back in, where was this? In November of 21. That was I guess that's 20. No, that's 22. That's 23. Sorry, I'm looking right below it. There's definitely times when I was underperforming, and those were a lot of the stocks that people said weren't going to go anywhere when we were buying them, right? That was the Palantirs, that was the DraftKings, that was SoFi. And now that Palantir and DraftKings is back up, SoFi has been on a tear. Yes, that makes my individual portfolio look better. But again, there's always that different time to buy things, right? When we're looking to buy NVIDIA at the end of 22, and people are saying, well, Bitcoin mining's done. Don't worry about that. The crypto space is falling. NVIDIA is slowing down. And, then we're buying it, and, we've got 4, 5, 600% returns on it. Then we look like all stars. So there's always a case of something that you should be buying versus something that you probably should be holding off on buying, at least in my experience. So a lot to be said there. Hopefully that gives you a little bit of, justification as why we're even talking, why we're even here. And then I really wanted to get into the stocks that you really want to purchase and hold long term. But first up, I did want to cover the investing challenge for, where are we at? Week 50. This past week, we bought Celsius Holdings. Celsius is the drink manufacturer that is going to be more, or energy drink manufacturer that's looking at high fructose corn syrup free, no artificial sweetener or no aspartame, no artificial dyes or flavors. I believe it is. There might be artificial flavors. I'm not sure about that one. But a lot of the things that are in other drinks that, a lot of consumers are looking to get away from, Celsius is already out of. So the fact that they are, at this huge drop, I mean, I don't want to buy this at $96, but now down here at 29, I'm thinking this starts to make a lot more sense. If you look at it on that long-term basis, from 2018 being $1.73, and now in 2024 we're at 27.98. That is a huge jump, but we're also came down from some huge highs. So I'm starting to see an actual decent valuation down here, that we're getting to the point where we're oversold, and some of that market actually starts to make sense for Celsius to actually take off from here. So yeah, I'm happy to be buying that one for week 49. For week 50, we were looking at Dell, AMD, Google or Alphabet, L3 Harris, which was LHX, and Lockheed Martin, which is LMT. And for week 50, we are going to be buying AMD. AMD is actually the stock that I already purchased this week. I bought 40 shares. With that money from that coverage call on Tesla, I did go ahead and buy 40 shares of AMD, and I have another purchase set up for another 40. When we're looking at this stock here, a lot of this base has been setting in, right? We've got some lowers, some low here. We dropped down, but then we found, we didn't go and break that low from the previous drop at that next purchase. And then we kind of met it again, and we're trying to bounce back up. I definitely think that this thing has a lot of room to run. AI race is not done. The crypto mining's not done, right? Bitcoin being probably $102,000, $103,000 now, which again, the time to buy Bitcoin, man, that was when I was calling it at 17. That was the buy. I wish I would have bought more. I wish I had more cash to buy more that winter. It was a slow winter, and I just didn't have the cash to just pile money into Bitcoin. But Bitcoin's at 101,975 right now. Just insane. Absolutely insane. So that one in AMD, the fact that their new AI chips that they're making are rivaling NVIDIA's. They were looking at $2 billion worth of revenue on that device, and it is actually looking like it's going to come in year end at $5 billion is the new projection. So big movement from NVIDIA. I think a lot of people are sleeping on this one. You're looking at the trailing PE saying, oh, that's expensive. I don't want to pay 126 times what they earned to buy NVIDIA, right? I'd rather buy, or buy AMD, sorry. I'd rather buy NVIDIA, right? If you look at NVIDIA, their PE on the trailing 12 months is half of that. So some people look at the trailing numbers and think, well, why would I overpay for AMD when NVIDIA has been doing so well? But it's also a forecast going forward as to what these two are going to do. So I'm looking at the forward peg ratio on AMD, and I believe it was 1.1. I can't pull that chart up here. They don't have Reuters, and that is the way that I really like to look at this. Actually, it might be Refinitiv. Oh, I can. Yes, I can. Sorry, guys. So yeah, this is, let me share this tab instead. So this is going to be NVIDIA. It's rated a buy. We've got 2,600% of returns over the past 5 years. And this is always the form that I try to pull up for you guys. We've got, and for some reason calls it Refinitiv on here, which probably throws me off. About 16% of upside from where we're sitting. We've got earnings still steadily going up for 25 and 26. We've got annual revenue for 2025, 112% up. This thing is still going, guys. 222% of revenue growth by the end of 2026 for, NVIDIA. Just massive, massive returns. I'm still happy buying this one. I've actually been buying this one as well. Dividend growth, 75% year over year. That's awesome. Granted, it's still like a penny, but whatever. I like the fact that they're committed to thinking about that dividend as well. Dividend payout only 1.3%, so they've got all kinds of room to up that dividend if they care to. But they're rewarding investors enough with just what the actual returns of the company have been. So we're looking trailing PE was sitting at a 57. which is a discount to their 5-year average, right? So it's 25% off where they normally trade. But going forward, we have a 36.9 PE, which, starts to look cheap, right? We're looking at the growth of some of these other companies, or we're looking at the same PE as some of these other companies, but we're getting so much more growth out of NVIDIA, right? And that's where the PEG ratio comes into play, right? We're looking at a forward PEG ratio, which is your forward PE divided by the 5-year forecasted growth rate. So under 1 or under 2 is fairly valued. Under 1 is a steal. So you're still getting a severe discount on NVIDIA based on that forward PEG ratio from where it is now and how much growth it has going forward. So I'm still buying NVIDIA, which is crazy because it is such a large position for me, but I'm still on board. And now, do I think we have this, a 20-year run for NVIDIA? I don't know. That gets really tricky. I think AI is going to get built out in the next 3 to 5 years. I don't know that it ever stops. I think it keeps evolving. You keep seeing SoundHound kind of coming up and doing more with voice AI. There is always going to be some new iteration of what is going on out there in the computer space. And I do believe that NVIDIA will be involved. So do I say that it's a buy and hold stock? I do. I don't know that if I sell it, I'm ever going to completely sell out of this name at this point. So for me, it is a buy and hold stock. The forward PE, we already went over that, 36.9. So that is actually a discount. And when we're looking at the trailing, again, up here, it was at 57. So just because the trailing is higher doesn't mean where it's actually headed, which is the forward PE, is truthfully in line. I've talked about that several times as well. So let me see if I can get out of that one. Let's try to go back over here. Let me see if I can find in AMD. Let's see if I can pull up that chart, and then I will share that one with you guys. If Refinitiv, not Reuters, is on here, let's see. Oh yes, I can. Man, I've been just waiting for this for so long, and now I actually figured it out. Oh man, it's golden. Let's see. We got now I have 2 of them open. I think this is the one. Yeah, AMD. So still a buy. The 5-year return is significantly less at 263%. Still awesome. I remember that when this was a $9 stock, thinking, man, I don't know if this is worth buying. And I was wrong there. And hopefully we're not wrong all the time. What do we got? We got no upgrades, no downgrades. Price target around 27% of upside here. So more upside on AMD. That's 43 analysts there. Earnings per share. Going to be, well, it dropped in 2023. If you look at this, it came down from 350 in 2022, and it went down to 265 in 2023. So we definitely had a dip there, but rebounding for 2024 and then shooting back up for 2025. So another reason I think this one had sold off is because the earnings had dropped, and then investors wanted to say, hey, can you show me that we're going to get back to where we were, or is the growth done for this company? And that growth is going to return. So when we're looking at that, we got this annual revenue here. It is not the same as NVIDIA's, right? NVIDIA, we were looking at, well, this is for 24 and 25. NVIDIA's were for 25 and 26. So we've got another 30% roughly for 2025. But I do believe that it's going to continue on past that. So where are we on those numbers? We've got forward PE. Well, the trailing, right, was 129. And we were looking at NVIDIA's at 57. Now forward on AMD is 31, where on NVIDIA it was 37? Is that right? So it's going to come in a little bit cheaper. It's still trading at a discount, which is nice to see. It's a 15% discount to their 5-year average for those that are not watching the video. And going forward, we've got a PEG ratio of a 1. So NVIDIA still looks like a better long-term play, but I do believe that AMD has more growth potential from that slow year in 2023 to actually rebound higher. So these numbers, sometimes when you're just looking at the trailing PE, it can really throw you off, right? You're looking at a trailing PE of 129, but you're also comparing that to old earnings. You're not looking at the new earnings or where they're actually going to be going. The PEG ratio, again, is going to show you the price earnings multiple divided by that 5-year forecasted growth rate. And that is going to tell more of a tale as to, is the PE decent compared to the growth that you are getting? So again, if you've got more growth to be had, that PE, it can be a little bit higher because you're willing to pay a little bit more for the growth that is going to be coming into that company long term. So a lot of different things to take into consideration when you're considering, should I buy this stock? Should I hold off? I do believe that AMD is going to be more of a competitor to NVIDIA going forward. I think that 23 was, a bit of a sell-off in different parts of their business. Some different things weren't going as well for them as they were going for NVIDIA. NVIDIA was running away with a lot of the different things for AI. Just a whole slew of things that were in NVIDIA's favor, right? But I do believe that AMD can rebound from where they're at and start making some real competition for NVIDIA. So, is there a perfect stock to have? The numbers would probably point to the fact that NVIDIA has done much better growth over the past 5 years. But I don't know that AMD is any slouch, right? With 263% of gains in the market, that's not bad, guys. You would definitely prefer with that time machine to have those NVIDIA returns, but it's certainly better than a lot of other ones that have been out there, right? So I think you got to take that into consideration of, hey, do I want to buy AMD and potentially have a 100% gainer over the next 3 years? Or do I want to buy Pepsi and have, maybe 18% over the next 3 years? So definitely a case of weighing your options and seeing what is out there. So I think that comes into play, full circle as to what stocks you want to buy and when. And again, I think AMD, after that sell-off, after a weaker 23, kind of lends itself to be purchased now for the gains that they're going to potentially have going forward. So a lot of different things to contemplate when you're in these situations. What's the backdrop for economics? What's the backdrop for this, that, or the other? And is it a case where you want to buy this stock and hold it long term? There's other stocks. You look at Boeing. Do I want to hold Boeing for a long time? At one point, everyone did. At one point, everyone wanted GE, or AT&T. But a lot of these things have changed over time. So it's really hard to have a buy and hold forever. I think it's more of a buy and hold for this foreseeable future. Or if you listen to Jim Cramer, it's a buy and homework, and you kind of got to keep up to date with what these stocks are doing. So yeah, what stocks would I look to buy and hold right now and be a forever stock? Well, stock one, I'm going to have to go ahead and this is actually going to be the 5 for this week as well. So this is going to be week 51. We're looking at the Let It Grow Investing Challenge, but I'm also making that the buy and hold for the foreseeable future 5 stocks of the week. So the first one is going to be Amazon, right? Amazon is just a absolute powerhouse in so many different things. Sorry, guys, had to take a coffee break. We got all things retail. We've got, the Whole Foods, we've got pharmacy, we've got advertising, we've got AWS. You got anything. I went up to a property for snow yesterday, and they have a gate with an intercom, and it says right on the gate, you have Amazon key for delivery, right? All I have to do is have my phone set up to get in their building for an Amazon delivery. I'm sure it's for Amazon workers, but I'm wondering if I can use it to get in at 2 a.m, or do I have to have the key fob? Or it's not like I can call whoever I'm going to see. It's like I'm not going to see anyone. I'm just going to, clear the lot of snow. So I'm like, man, that's really an interesting thought. Do you give access to different employees that could potentially be at a job site based on Amazon? Is there a way to do that? I'm sure there is, and I'm sure you can get away from a lot of those key fobs by having something like an Amazon key that hooks up to Bluetooth and has security built into it. Sidebar, right? Long term, I think this thing is going to continue to just kill it, right? if you look at the revenue, you're in the upper, what is that even 12 figure revenue. I can't even think of how many, $700 billion of revenue it is. In the next couple of years, they're probably going to be the first company that is at a $1 trillion in revenue a year. That is just insane to me how much money goes through their businesses on any given day. It is just remarkable. I didn't even think of Prime. I wasn't thinking of Amazon Music, or like all the different Prime subscriptions. I was thinking of retail, but I wasn't including the Prime, right? So there is so many things there that Amazon can just flip a switch. If they wanted to go directly after Costco or directly after Walmart tomorrow, they could, right? They could make a cost center, Amazon cost center on Prime, have every item that Costco has and have it shipped to your door if they so choose to click that button and go right after Costco's business. And no one can stop them. They really can't be stopped. The biggest thing for Amazon is the moat that they have around all of their equipment, all of their land, the warehouses, the planes, the cars, all the infrastructure in cloud, all the servers that they have built out. I don't think that any one company can come in and disrupt an Amazon in the foreseeable future on all aspects. Someone can come up, and kind of do a piece of what Amazon is doing, but I don't know that anyone can disrupt all of Amazon's business other than the government. I think that is a big weakness at this point would be, are they too big? Do we have to break it up? And then what do we do from there? So Amazon, now that I've got this Refinitiv option here, and that is my absolute favorite way to see where a stock is going. Market Edge. Let me point to this one real quick. Let me share this one instead. This is going to be the best way that I have found to know if I should buy a stock at this given point in time. So Market Edge says that this is a long. When it was changed from neutral, it was upgraded on October 2nd. The price at the change, how much it's gone up since that change, and basically what the conditions are around this stock. I like this for, do I want to get into this position at this given point in time? I think that is probably one of the best ways to do exactly that. Now, when I'm looking at long term, when I'm looking at financials, again, that is going to be Refinitiv or Reuters. And I'm going to pull that screen back up. I have to close out of it and go back in this way. That's how I'm looking to do this. I can probably do it a little bit different. But yeah, so we're looking at Amazon here, $2.2 million or $2.2 million trillion market cap. Buy rating, 70 analysts, 5-year return of 147, which I think is weak for the amount of things that they've done. We've got, this is definitely one that dropped at the end of 22. I'm sure I was looking to buy it there. I'm sure we did buy it there. We got, what do we have going forward? Come on, don't lag on me now. We got only 6.8% of upside. I don't know that that's going to happen. I think we're probably going to be 250, 275 by this time next year. 4 holds, 47 buys, 19 strong buys. Annual revenue, 11% for 2024. And then we've got, 23% by the end of 25. So that is cumulative. So we are looking at 11, 12% by the end of 2025 from pretty much where we're at today. We've got no dividend there. We've got forward PE. I'm getting to the good stuff here that you guys want to see. Forward PE 37.3. S&P is going to be much lower at a 23.6 average. So your average of all the stocks in the S&P 500 is going to come in much lower, but you also have to think about the fact that there's banks in there that are going to be much lower. There's going to be industrials, which are generally much lower. Utilities are going to be much lower on that S&P or on that PE valuation. And then your tech stocks are going to be higher valuation for more growth, right? People are more willing to pay higher valuations or more money for the growth that these stocks are returning. And that's why that valuation on these different tech stocks is going to be higher, right? People are more willing to pay more for the growth. So now we've got a 43% discount compared to where this historically trades. So if we look at the the earnings and multiply it by 65, that is the 5-year average of where this thing normally trades. So a big chunk higher from here. Yeah, 5-year average. Now this peg ratio, again, I'm thinking this is a good entry point on Amazon. Forward peg ratio is a 1.1. Their 5-year average is a 2.1, which is the same as the S&P 500, and other department store industry average is a 3.1. So as far as the growth that they're returning, as far as the price that we are paying, this is at a discount currently, and I would be continuing to add more. And I have, even though this is already a full size position for me, right? That doesn't mean to say that I won't add to it, but I'm trying to even those out, right? I don't want to, just buy all Nvidia or all Amazon. If they're already full, I'm going to try to pick which ones are my the best valuation. I'm going to buy those based on the numbers, not simply just sentiment or whatever I feel. So I'm looking at all these things, trying to internalize which one should actually get my dollars in that given week or time, and kind of go from there. So Amazon is going to be stock one. I'm going to try to keep some notes here as to what's going on with that. So that was a 6.8% upside as far as Reuters said. Is this number here on? Yeah, it's still 6.3 on E-Trade as well. So we did have a bit of a run here. You can see it on this this kind of dot chart here. Let's see if we can't look at it over the past 3 months. Pretty big run up, right? We were down near 182, and now we're sitting at 224 in about 2 months. So already a pretty big gain. I still think that going forward, this is still a great long-term buy. That peg ratio is still cheap, and there's a lot of growth to be had for Amazon. And I still think that they're really the powerhouse of all companies, most well-rounded, and I don't think any one part can be disrupted like Nvidia, right? Nvidia does what they do really, really well, but if that business went down, they don't have other things to lean on the way Amazon does, right? I know they're still doing other chips and components and things, and AI is the big one. But if AI goes down, I think that Nvidia really, really gets beat down quickly versus Amazon. If Walmart suddenly decides that they're going to do what Amazon does and try to do it better, Amazon can lean on AWS. They can lean on more advertising. They can do a lot of different things. So I still think that Amazon is a great play. And let me know if you guys want to buy this one, right? This is a week 51. I'm going to rate these as we go, so we are up to speed here as well. Got multiple charts going. Number 2, this one might be a little controversial. I'm going to say Meta. I know I can feel it. I can feel people getting upset that I'm even talking about this one. But when you look at this thing long term, it has had multiple, just massive gains since the IPO in 2012. People thought it was going to fizzle out. People thought it was the next MySpace. Zuckerberg decides to go and buy Instagram, right? He spent $1 billion on Instagram. People thought he was out of his mind for buying an app that basically shared pictures. He integrated it into Facebook. Now, if Instagram were to be sold, it's probably worth $150 billion. So I definitely think that is a smart purchase for him. WhatsApp was great as far as, adding on more businesses that continue to, increase the moat, have, just a slew of businesses all under one umbrella that really does, social media, I'll say the best, right? They have the most advertising dollars. They have the most people. They have multiple millions, hundreds of millions of users on these things every day, every month around the world. And I think that they are going to continue to do that. I don't think, this chart will show us that they weren't a one-trick pony. They certainly took this beating here. There was all the different investigations. There was a bunch of different things. There was a bunch of different problems around, elections and interference and this, that, the other. But I think going forward, they are going to continue to outperform. And I don't think they go away just on the fact of some other company coming up and trying to get their business. So I think that Meta is pretty well locked in for the next decades of growth here, right? They are still doing more and more on growth. And I think that they have a bright future in all the things that they are trying to do. I know that, all the things spending on metaverse, that was also a big problem. That we've kind of backpedaled on that. We've kind of, changed the trajectory of where the company was going. And I do believe that they have a better handle on it now. And they're going to, do a little less capex, and they are still going to try to get into these different realms in a more investor friendly manner. So I still think that Meta is a buy and hold stock for the foreseeable future. So we've got upside on this is probably going to be thin as well. Yeah, 6.17. And that is also after massive gains in the past couple months here. In July, we were sub 500. Now we're at 624. So massive gains there. Number 3, I can feel this one too. Tesla. Oh boy. So many different things with Tesla. Some people want to call it a car company. Some people want to say that it's garbage. Some people don't like Elon. I still think that Elon being at the helm is going to focus heavily on efficiency. He is maybe not the CEO that everyone thinks that he could be for Tesla, but he's trying to do 15 different things at one time. And I truthfully don't know how that he manages all these different things, but I think he's smart enough to appoint the right people for the job. And I think that has gotten him to where he is, right? I don't think that he is the end all be all of knowing how to build all these things, but I think that he is smart enough to find those people and have some of the best engineers and some of the best people working for him, right? So Tesla and the fact of full self-driving, I think that they're going to figure it out. If anyone's going to figure it out, there's definitely some other competition. Google's got Waymo. There's different LiDAR things that are out there. I don't know all the ins and outs of it. I am not a professional at it. But I do think that Tesla going forward is one of the best stocks to buy and hold for a long term. The fact that they're in Bitcoin, I think, is also highly changing this stock price. We're at 376.94. The average price is 251. It's difficult, right? Someone's got the low at $24. They're out of their minds. That is not going to happen. And if it does, I would be there buying so much of it, it wouldn't even matter. Uh, I'm definitely not sure of the purchase right now, right? And I'm looking at this one not as a stock to buy simply on valuation for today. I told you guys I have 3 orders lower than this. I am not chasing this thing. I did buy at 351 earlier this week, and then I put in all those other orders for lower than that. I showed you the position. I've been in this one for a long time. I don't know that I would ever completely sell out of it. I really didn't think I was going to be selling out of it at 300. This chart is why I ended up selling out of this thing. I wrote this covered call somewhere around here, somewhere around the 220 range, and it shot past 300 by the time that that covered call expired. So I wasn't really looking to sell it. I just wanted the premium. I got a little bit greedy and it bit me. Bank of America's got this thing at 400. Kathy Wood, I still think that she's probably got a price on Tesla of like 2,600 by 2030. I'm not even sure the numbers anymore. If anyone even still follows Kathy Wood, I know there's a big, falling out of love with everything that ARK Invest has done. But I still think long term that Tesla is one of the best stocks you can buy and hold, especially with Elon at the helm. I still think that it is going to be a huge thing. They've got the Model Y Juniper. The update is going to be coming out for 2025. That'll be the new vehicle. Larger battery pack. I forget the kilowatt hours on that. I know it was north of 100. Someone was saying that it was possibly a 500-mile range vehicle. I hate to tell you, but you're not going to see 500 miles of range out of it unless you're one of these hyper milers that is willing to do 15 under the speed limit and not have the radio, not have your anything else running, not have any heat, any air. I think that that is a pipe dream, right? But you'll be lucky to get 375 to 400 out of it. And I think that would be more than suitable for most drivers, right? Anyone that needs that vehicle, I think that is going to more than suit you for a road trip or to do what you need to do running around town, or even if you're in like a sales job and you need to get from A to B to C all day. I do think that that would be enough mileage for you then to recharge overnight and continue to drive tomorrow. So I don't know that I necessarily like buying it at 376. It kind of hurt to buy it at 351 if I'm honest, but I think long term, if you're going to buy and hold something, this is a great stock to do that with. So that is going to be number 3, and it's not for the upside currently. It is for the long-term projections that I think that they can actually pull off for the technology that they're going to have, the robo taxis, all the different things that they're aiming for. I think they're going to get there eventually. Some people still say that full self-drive is never going to happen. Um, I don't know. Theirs seems to be pretty intuitive. Not to say that it doesn't have problems, but I think it is going to be better and better, especially as Elon put it, with less human interaction. Most of the problems with the full self-driving is other human interaction on the road, right? Other people making crazy turns, other people, unnecessary lane changes, and the car freaks out. But if they're all on the same program, then everything is kind of working together in the way that they view that the road should be driven. Not to say that I ever think that everyone's going to be driving on full robotic or full self-drive. I don't necessarily care to drive like that. I'd rather drive a vehicle, but I know a lot of people really lean on the technology. So that is number 3, and I'm sure that a lot of you disagree with that one, but that's okay. And it does have minus 33%. So if you don't want to buy that one right now, I'm not going to argue with you. Number 4 of stocks that you can buy and hold for the foreseeable future, I got to look at Home Depot. This is another stock that I don't know is ever going to go out of flavor. It's not like they're going to have products that are going to be, just a flavor of the week. I mean, some of it is, but styles change. But what they're going to be selling is going to be into the style at any given point in time. People are going to have things break. Plumbing problems, roofing problems, they're going to be happening for the foreseeable future. And as long as we have homes or we're building anything, I think Home Depot is going to be a great company for that. So yes, this thing doesn't have much upside either, right? I see it. I know it, but again, it's for the long term. It's not just for today. So would I have rather bought this thing back in July sub, 340? Certainly, right? Rather than at 430. But here we are, and this is the current environment that we're in. Home Depot has had massive returns. You look at this thing, if we go long term, it wasn't too long ago. This thing was in the sub 100 kind of price point here, right? I'm sure I got in somewhere in this time frame around 150 to 200 and kind of kept buying in. This is a very nice chart, one that is going to continue to be in favor, right? I think as long as people are fixing things and breaking things, and we need to get new updates here, there, and everywhere. I do believe that this is always going to be a stock that you can buy and hold. They have made it their mission to raise these dividends. They are one that is really strong at raising the dividends. The earnings are strong. The PE is fair. You've got a 2.1% dividend yield, which currently mine is, significantly higher based on my cost basis, which, I mean, I guess I'm probably up 100% on this thing, but I did sell out of this a couple times and take some profits and buy back in. Refinitiv, let's take a look here. We're going to share this tab instead. 5-year return, 99%. That's probably what I'm seeing. We've got, let me get down to the actual forward numbers. 3 upgrades in the last 120 days. Very little on this upside with the price accumulation or price appreciation that we've had over the past couple months. We've got earnings coming down, right? We've got that, right? Why? Well, a lot's to do with rates. A lot's to do with the fact that everyone built everything they needed during COVID. We've redid a lot of different things, and these things are coming back down, but we're finally starting to see the light at the end of the tunnel, and it's looking like we should be better for 2026. So we are looking at those, right? We've got annual revenue dropped for 2024, and now it's slated to go up for 25 and 26, which this chart makes it look like it's, off the charts good. But if you look at the actual numbers, it's 3.9% for 25 and 7.4% by the end of 2026. We've got dividend growth, 8.2%. This thing has paid out a double-digit gain for dividends for quite some years here. This thing has really been paying out more and more in the way of dividends. The dividend payout ratio is a comfortable 60%. I like that price target, or that the dividend payout ratio. I like where they're aiming to keep that ratio at. So that's comfortable. It is trading at a bit of a premium. Again, this part of this is not necessarily what are we buying that is at that screaming valuation, but what do we buy and hold for the next 10 to 20 years? And I still think that this is a great company for that, albeit some of these are not the ones that you want to just dump all your money into right now, but you could dollar cost average into these over time, right? We're looking at buying, a piece now, a piece in 3 months, 6 months, 9 months, 12 months, and kind of continue to buy and build up a position. It could be weekly, it could be monthly, it could be every, 6 months. It doesn't matter. The thought is to build up that position and get more and more gains in these stocks as things look better. So again, it's just what I'm looking at for long-term gains. So Home Depot, we've got trailing PE of 29, price to sales a little bit high, forward PE 27. Their 5-year average is a 21. That forward peg ratio is painful. That's not one that we want to see. So again, that growth is not as high as that PE is, right? So we're hoping that this growth can get turned around from this single digits, and we're looking at something that we can get more growth out of in light of the actual price that we're willing to pay for this stock. So again, not one that I'm like screaming to buy this thing, but I do believe that long term it has great financials, great buyer retention, consumer demand, and a lot of different things going its way. Number 5, this is tough, guys. I looked at Coca-Cola. I'm worried about things there, right? I think the taste of consumer demand is changing. I don't know that as many people want, the sodas and a lot of the carbonated drinks going forward. That's not to say that they're not huge. That's not to say that they're not going to, continue to grow. But it just seems like what happens here, is McDonald's the company that you want to buy and hold for the next 20 years, or are cheap burger patties going to go by the wayside, and are we going to be looking at another food type? I don't know that they're going to go by the wayside, but I don't know that I want to bet the farm on it either. So the one that I came up with is actually going to be, I keep doing that. I keep leaving it on the screen. The one that I am looking at is going to be JP Morgan. So JPM is the ticker. And let me go ahead and share this screen as well. Let's do that real quick. JP Morgan Chase. They have a lot of things going really, really well for them. Their business is really, heavy on the banking, heavy on the investing, on the consulting. And I still think that JP Morgan is going to just be a leader in the industry. And yes, could that change? Sure. But I still believe that JP Morgan has enough assets under management. They have enough infrastructure built in that I believe that they are going to be safe, right? I think that, yes, Jamie Dimon being at the helm helps. What happens when he's not there? What happens when someone else has to take over, or, a Bank of America steps in, or Citi gets their act together and they start looking better? There are certainly those chances, right? But I think JP Morgan is going to attract some of the wealthiest clientele, and they're already there. And unless they really slow down or really mess up, I believe that JP Morgan has a moat around the type of clientele that they have, the investing business that they currently share, and really where it goes from here, right? So a bank, you're going to see these cheaper price earnings valuations, right? This is on the trailing 12. Earnings are very solid. So you're looking at a 2% dividend yield. I was going to try to do a little bit of math for you, but I'm not seeing the number I need. So this one has really rallied higher as, we've spurred a little bit more demand with rates coming down, and it has taken off, right? So we have seen this one move up nicely this year. This is the 1 year chart, and we're down 170. Now we're sitting at 246. So there's probably not much in the way of upside on this one. But again, still negative, right? I didn't even look at this before, and I kind of already knew it's moved too much to be something that is a screaming purchase for everyone to get in at this point. I think this thing already ran. I'm still comfortable with buying this thing long term. So that is the 5 that I've come up with. Those are the reasons why. It's definitely, for me, I know where I would put my money right now in these 5. I have no doubt that I know where I'm going, but I'm curious as to where you guys are going, right? So JP Morgan's a -1. Home Depot, let me just get back to that. What was the number on Home Depot? Was it 2? I forgot to write it down. 2.28. So not the upside that you guys are looking for, right? If I were strictly looking for upside, Palantir is a tough one because it's run so much. I would probably be buying Nike. That one I still think is in that running for buy and hold. I think it's one of the longest growing clothing and shoe companies that's out there. It's 50 years, and man, it's just been one of the ones that you always think there's going to be some disruptor, but they just kind of become the fly-by-night company, whether it be Allbirds or Lululemon or any of the other names that have kind of come up and taken market share. They kind of come in and then they fizzle out. Nike's had these problems with revenue over time, but I still think that long term they are going to be one of the top ones, right? I still really don't know that people are going to go away from them. I don't know that like Under Armour has been painful. Under Armour has been absolutely painful to own. I haven't even looked at this one in a long time, so I'm kind of just saying this out of the side of my head. But I mean, I was buying this thing 7 years ago at $16-17, and now we're at $9, right? So this is certainly something that I thought was going to run. That's all. Yeah. So I was probably trying to trade it around this 19. I don't even remember the exact trade here. I think it was something where I was buying it here, it dropped, and then I got back out of it in that kind of $20 range, and it hasn't gone anywhere. So people thought that Under Armour was going to be there. People thought that all these other fly-by-night companies were going to just destroy Nike, but Nike kind of keeps coming back. I think the fact that they built out so much infrastructure with youth sports and different, building of that side, that they have such an influence on sports that I think people are going to continue coming back to them. Micron, I still think that Micron is probably one of the best stocks you can buy now. I have been adding to this one. I will continue to add to this one. I'm still buying AMD. There's a lot of different things that I'm looking to buy, and they aren't necessarily the buy and hold forever. But I do believe that Micron has a lot of movement to the upside that I feel comfortable buying it at 101, or actually I've been buying it sub 100 and letting this thing run up. So that is kind of a long-winded way of reintroducing myself, reintroducing what we do and why we're doing it. And a lot of that is, to have our money work as hard as we do. That is certainly something that I look at. It's certainly something that matters to me. And how can I save my back from doing manual labor or putting in all those hours out in the sun and have this money work as hard as I do? So that's the reason that I'm here. I'm hoping that I can bring other people, kind of to the light that, maybe got, beat by buying some of these fly-by-night stocks, buying Under Armour, at $20, $30, and then just watching your money just disappear. So hopefully we can kind of demystify some of that. Hopefully you can bring some others on board. Please make sure you like, subscribe, and share. I'm not asking for any money from you guys. I'm not selling any private courses. I'm not doing any of that. But please just click that like button. That's all I'm asking of you guys. And if you want to share it, that'd be great as well. So thank you guys for stopping by. That is all that I've got the time for today. I'm going to actually try to be proactive here and stop sharing my screen and say thank you. Have a great weekend, and I will catch you in the next one. Take care.